Every single day, hundreds of people pack up their lives, load a moving truck, and drive across state lines headed for the Lone Star State. Texas has spent the better part of a decade being America's most talked about relocation destination. No state income tax, booming cities, affordable land, and an economy that seemed untouchable. But 2025 changed the story. Texas recorded the largest net out migration of any state during 2025, reversing decades of in-migration that had made it a national growth story. So what happened? And more importantly, if you're thinking about moving to Texas right now in 2026, is it still worth it? Today, we are laying out the full picture. The good, the bad, and the numbers you actually need to know before you make that call. If you're new here, this channel covers real data on the best and worst places to live across America. No fluff, no filler. Hit subscribe so you don't miss what's coming next. Let's start with what still draws people in, the finances. Because on paper, Texas still looks good. Texas's 2026 cost of living sits at around $2,300 per month for a single person and just over $5,000 per month for a family of four. That puts Texas living costs roughly 7% below the national average. Housing is still the headline act. The average home price in Texas is approximately $423,000, well below the national median of $510,000. That gap is even more dramatic when you compare Texas to the coasts. A three-bedroom home that costs $900,000 in the Los Angeles suburbs averages between $350,000 and $450,000 in the Dallas-Fort Worth or Houston suburbs. For renters, the story is just as compelling. Houston's citywide average rent is holding steady at roughly $1,181 per month in 2026, a staggering 27% lower than the national average. Thanks to a massive surge in new apartment construction, landlords in Houston's inner neighborhoods are actively competing for tenants, leading to stabilized prices and move-in specials. Statewide, the median rent in Texas is $1,258, compared to the national median of $1,639. Then there's the tax situation. Texas has no state income tax. This means your paycheck is free of state-level deductions beyond federal obligations, putting more money directly in your pocket. For high earners relocating from states like California or New York, that difference is enormous. A household earning $200,000 annually saves roughly $15,000 to $25,000 per year in taxes alone, when comparing California's top rate of 13.3% to Texas's 0%. That kind of savings is not a rounding error. That is a life-changing financial shift. And for everyday spending, gas averages just $2.76 per gallon in Texas, and residents spend about $286 per week on groceries. For most families relocating from coastal metros, the adjustment in purchasing power is immediate and real. Now, let's talk about what brought a lot of people to Texas in the first place: jobs. And here, the picture is more complicated than the headlines suggest. Texas economic output grew in 2025, but it did so with near zero job growth. The last time that happened was in 2002 and 2003, when the state emerged from the dot-com bust into an extended jobless recovery. Texas contended with weak oil prices and high-tech layoffs throughout the year. The Federal Reserve Bank of Dallas projects Texas employment will grow about 1.1% in 2026, following that sluggish year statewide. That is modest, not alarming, but nowhere near the explosive hiring Texas was known for earlier in the decade. Texas employment did rebound in early 2026, with headline business activity indicators remaining positive, pointing to continued output growth. However, significant headwinds persist, most notably the impact of the Iran war, which has negatively affected nearly half of surveyed Texas businesses through higher fuel costs and heightened uncertainty. Looking at the breakdown, the strongest job growth in the early months of 2026 has appeared in professional and business services, construction, and leisure and hospitality. Other sectors have seen modest growth or actual declines. Economists describe the current environment as low hiring and low firing. That may feel stable for employees already inside the workforce, but it creates major challenges for those trying to break in. New college graduates, career changers, or the long-term unemployed. The bottom line on jobs, Texas is not the wide-open hiring landscape it was in 2021 or 2022. If you're moving without a job lined up and expecting to land quickly, you should go in with realistic expectations. If you're relocating with remote work or transferring within a company, Texas still makes a lot of sense. Here is where the conversation gets uncomfortable, because Texas has developed some serious cost landmines that can completely undermine the savings you thought you were going to get. The first one is home insurance. In 2024, the average annual home insurance premium in Texas reached around $6,000, nearly double the national average of $3,200. Projections suggest this could rise by another 9%, potentially surpassing $6,500 annually. One Dallas area homeowner described watching her premium climb by $1,000 every single year since 2021, going from a manageable sum to nearly $5,000 annually. Why is this happening? The number of annual billion-dollar disasters in Texas has grown 250%, from 8 storms in 2017 to 20 in 2024. Texas's share of the total number of U.S. billion-dollar storms increased from 8% to 74% over that same period. That is a staggering shift in climate risk, and insurance companies are pricing it in aggressively. There is some relief on the horizon. The pace of growth for Texas homeowners insurance has slowed substantially from 18.7% in 2024 down to 4.3% in 2025, according to the Texas Department of Insurance. And that slower pace is expected to persist through 2026. But the damage from prior years has already been locked in. The second hidden cost is property taxes. Texas has no state income tax, but the government still needs to be funded, and it funds itself largely through property levies. Property taxes average 2 to 2.5% of assessed value in Texas, among the highest in the nation. Renters feel this indirectly through higher rental prices. There is some good news on this front, too. Voters approved an increase to the mandatory school district homestead exemption in late 2025, raising it from $100,000 to $140,000. For homeowners occupying their property as a primary residence, the first $140,000 of a home's value is excluded from school district taxation. That is meaningful, but it does not erase the broader property tax burden entirely. The takeaway here is important. The no state income tax headline is real, but it does not mean Texas is a tax-free paradise. You are paying through property taxes and home insurance instead. And for homeowners especially, those costs have been climbing fast. Not all of Texas is the same, and where you land matters enormously. Austin's median home price reached $525,000 in 2026, representing a 50% jump from 2019 levels. Dallas sits at a median of $415,000, while Houston, at $335,000, remains the most accessible of the major metros. Houston stands out as the most affordable city for dining out, with an incredible diversity of cuisines at competitive prices. Dallas offers excellent variety across price points. Fort Worth provides the best overall value for casual living. For those on tighter budgets, the deals are further from the major metros. Cities like Harlingen carry a median home value of just $155,000 and median rent of $695 per month. McAllen offers a median home value of $191,000, with an average rent of $834. These are South Texas markets that rarely make the relocation headlines, but they offer some of the most genuinely affordable living in the entire country. In the suburbs surrounding Dallas-Fort Worth, Frisco, Plano, Allen, and McKinney, families consistently find strong-rated school districts with multiple T exemplary-rated systems. For families with children, this corridor remains one of the best bets in Texas overall. So after all of that, is Texas still worth moving to in 2026? The honest answer is, it depends on who you are. A family relocating from California or New York typically saves between $800 and $2,000 per month after accounting for overall costs. If that describes your situation, the math still works clearly in your favor. High earners with remote income, retirees with fixed assets, and families escaping coastal prices will still find Texas to be a genuine upgrade. But if you are a first-time homebuyer expecting Texas to be simple and cheap, the insurance costs, property taxes, and tightening job market are going to hit harder than you expect. If you're a young professional, job hunting without a placement already secured, the current low-hire environment demands patience. Texas has not stopped being a strong relocation option. It has just stopped being an effortless one. The homework matters more now than it did 5 years ago. Know your city, know your insurance exposure, know your tax district, and run the real numbers, not just the income tax savings, but the full monthly picture. Do that, and Texas can still absolutely be worth it in 2026. Skip that step, and you may end up being part of the next wave of people driving back the other direction. Thanks for watching all the way to the end. It genuinely means a lot. If this video helped you think through your decision about Texas, do us a favor and hit that subscribe button. We're always dropping new videos breaking down the real cost of living, the best places to relocate, and everything in between across the United States. And if you've got a state or city you want us to cover next, drop it in the comments. We read every single one. Until next time, make smart moves.